So you're completely new to day trading and you want to learn how to grow that money as fast as possible. You've been seeing people online make insane amounts of money and you want to learn how to do it too, but you simply do not have the capital. So that's why in this video, I'm going to be showing you how to grow a small Forex account with as little as $50 in 5 simple steps. So step number 1, you need to take high probability setups. So what I mean by that is you don't want to just hop in the market and place random trades because you think it's going up or it looks like it's going up, or little Johnny down the street may have told you,
oh, gold is about to go up.
No, you want to take the highest probability setups, meaning that you have all of your confirmations being checked off. So whether you trade a MA cross, whether you trade breaks and retests, whether you trade a ICT, whatever it is, you need to have confirmations and you need to let the market tell you, based off of what happened in the past, this trade has a higher probability of going in a direction that I think it is going, simply because I've seen it done before. But you do not want to just hop into random positions thinking that you're going to grow your small account, because ultimately you're gonna blow it. And when you blow your account, you're gonna be back at step 1 watching videos like this. So that leads me to step number 2. Calculate risk before entering any trade. You should know how much is exactly at risk before you place any trade inside of the market, and this is extremely important. Ask yourself, how much are you willing to lose before you place that position? Because you have to accept that loss before you even place the trade. Where most traders go wrong, they place a trade and they don't think they're going to lose, and then when they lose, they think they're doing something wrong, or they're emotionally distressed. It causes an emotional roller coaster. When you accept the risk before you place the trade, now you know, okay, I'm willing to lose X amount and I'm okay with it. Whether it goes in my favor or it doesn't, I accept it. And that's the mindset that you need to have as a trader. If you enter a trade and you do not know how much is at risk, you may have over leverage or you just impulsively jumped in. Now this is going to cause you emotional wreck. So when you're in your trade, you might close it early, or you may go into a little drawdown and you just close out the position and take a loss, and then the market goes in your favor and you're like,
Wow, I knew I was right, but I just closed it early because I got scared.
that's because you did not accept the risk. Most traders fail because they do not know what's at risk. They over leverage. They simply don't accept that they're going to lose X amount on that position. And this is where I see it happen so many times when traders fail. Like 90% of traders literally blow their accounts. And that's because they do not have proper risk management. You do not have proper risk management, that leads you to making emotional based decisions. Like I said, closing early, closing a trade with a loss, or even simply blowing your account. Step number 3, you want to stick to a certain lot size that you are comfortable with. So what I mean by that is, if you have $1,000 account and you're comfortable with popping 0.10s, which is $1 per pip, or 0.20s, you need to stick to that lot size until you gradually build up some cushion in the account. Sticking to this lot size every single time keeps you from over leveraging, because you know, if I stick to a 0.10 and I have a 50 pip stop loss, I know I'm going to lose $50 every single time I place a trade if I have a 50 pip stop loss. And you have that understanding before you even get in the position. When most people go wrong when they're trying to grow their small Forex accounts is that they begin to increase the lot size that they're not comfortable with, and then it causes an emotional roller coaster. Trading is very mental, so you have to be mentally prepared for the journey that you are about to take. So increasing lot sizes too soon can literally cause you to lose your account or all of the profits that you made, simply because you tried to jump up too fast. So I like to equate it as like a 16-year-old driver that's just now getting their permit for the first time. You wouldn't put them in a brand new Lamborghini as their first car to drive, because a brand new Lamborghini can go extremely fast. So same thing in the market. When you use bigger lot sizes, those lot sizes fluctuate very fast. So you don't want to let that teen driver, or aka beginner trader, jump into the market with huge lot sizes that they're not comfortable with, because now they won't be able to handle it. So Just like a driver, a 16-year-old driver, you want to start them off with a vehicle that is not super fast. So it may be like a Toyota Camry or just a regular car, a Chevy Impala, so forth and so on. You will start them off with that vehicle because when they're learning how to drive, they need to learn the fundamentals, they need to learn the basics, they need to learn the mechanics of driving a vehicle before they drive a vehicle with a lot of horsepower. And that is the same thing that needs to happen in trading. So get comfortable with your lot sizes first. Get used to the fluctuations, get used to the drawdown, get used to how much money you're going to make, and then gradually increase your lot sizes. Another tip: do not double your lot sizes just because you won 1, 2, or 3 trades in a row. You do not double your lot sizes. You slowly, gradually increase. So you go from a 0.10 to maybe like a 0.13, then to a 0.15, then to a 0.20, so forth and so on. You will never go from a 0.10 to 2 standards after a few trades. It just does not work like that, and you need to train your brain to see the fluctuations in price before you start to just jump into huge lot sizes, because that one trade that you take on a huge lot size, and it may be that one loss after a string of winners, it will wipe out your whole account because simply you use too big of a lot size. Now you're battling yourself. You think you don't know how to trade. You think you don't know what you're doing because you're in emotional distress based off of that one loss. Step number 4, have a rule-based system. So what I mean by that is you must have a rule-based system in order for you to check off all of the boxes to say, this is why I'm going to enter the market. So whether you trade breaks and retest or whether you trade the MA cross, all of those things have to align before you place the trade. If the rules that you set for yourself do not check off, you simply do not place that trade. Following your rules that you set for yourself is probably the hardest thing to do as a trader. But when you develop the mindset and you train yourself to follow those rules, no matter what, you will grow your Forex account. It's simple, because ultimately, if you have a good strategy that works, you will be able to wash, rinse, and repeat every single day inside of the market. If you want my step-by-step blueprint strategy, it is located in the description, where I teach you how I personally enter the market with step-by-step rules that have to check off. And without those things happening, I do not enter the market, point blank, period. When you have a rule-based system, this eliminates you from just guessing inside of the market. When you guess inside of the market, that is taking a low probability setup, and that's what we talked about in step 1. You want to take high probability setups. How do you know it's a high probability setup? By having a rule-based system that allows you to say, okay, X, Y, and Z has occurred. Now I know that this market has a high probability chance of winning in this particular trade because I've seen this setup happen over and over and over again. Now, last but not least, step number 5, do not try to hit home runs. So think about it like this inside of baseball. If you swing every single time trying to hit for the fences, more than likely you're going to have a high strikeout rate. But if you just try to swing to get contact with the baseball and to get on base, you're going to have a higher batting average. So the same thing applies in trading. When you just try to take high probability setups that are going to build the balance and not try to flip the account overnight, you will see a lot more success. So what I mean by that is, instead of trying to chase a 300 pip, 400 pip move inside of the market, you should be okay with taking 30, 40, 50 pips along the way, because 30, 40, 50 pips, wash, rinse, and repeat over and over and over again will equate to those 300-400 pips. But you also have to think about it like this. If you take 30, 40, 50 pips every single time and you're gradually increasing the lot sizes, now every single time you catch those 30, 40, 50 pips, the amount of money that you make is going to get larger and larger and larger and larger. But if you swing for the fences every single time, over leveraging and trying to hit that home run trade, you have a higher chance of striking out, aka blowing the account. And that is not what you want to do. When you're trying to grow a small Forex account, you need to be very strategic and you need to be very careful with the trades that you're placing, and understand that you can lose your money at any single given trade but that's why you have to have a strategy behind growing a Forex account. Also, when growing a small Forex account, you need to take trades to areas where you know they are going. When you're approaching a level of support or resistance, it's very important that you look to take profit at those areas, because you do not know if price is going to make it past those areas. So if you watch my videos before, you'll hear me say, take the market step by step. And what I mean by that is, okay, if I'm approaching a level of resistance, I don't know if price is going to break this area. So when price gets to this level of resistance, I'm going to take my profit there and then let the market tell me, is it going to break past that area? So if it breaks through this level of resistance, gives me a break and a retest, I'm okay with taking more positions. But if it doesn't, then okay, cool, I solidify my profits at that area and I'll come back another day. I don't have to try to hold on to the monster trade thinking I'm gonna flip the account overnight. I simply just have to take what the market gives me every single day, every single time I look for a position, and that will make me successful in growing my small trading account in 2024. Now, if you're looking for a trading strategy that will help you build your small Forex accounts very fast in a scalping standpoint, check out this video right here. This video will give you all the insights that you need on how to grow a small Forex account, scalping inside the markets in 2024. Peace out.